family. Hope everyone is doing well. Today I'm making a video about a trade recap, kinda sorta. I didn't take any trades, but I just want to show you guys where my mindset was last night and what I was thinking and what played out today. So let's get into it. So yes, we are on we can consider it a new platform for me. So this is Top Step. This is their platform, but it is integrated with TradingView, and so far I've been loving it. So let's get into it. So first things first, we're gonna check the new week and new day opening gap. I'll show you guys what my mindset was last night and why my mindset was there. So last night at around 11 o'clock, we were just gyrating within this area. This was the new week opening gap that was created on the 13th of April. So literally yesterday when the market opened, or the futures market opened. So since we're up here, I'm like, cool, okay, we created a new week opening gap. I usually keep 5 new week opening gaps on my chart. So here's 1, here's 2, and then there's the other 3, and then 5 new day opening gaps. So since we were just gyrating within the new week opening gap that was just created, I'm like, you know what, we have a cluster of new day and new week opening gaps down here. Could that be the target? Possibly. But we also have a cluster of new week opening gaps up here. I'm like, this could be a little far-fetched. Not gonna lie, this target is much closer than this target in my opinion. So I'm like, you know what, I'm aiming for lower prices tomorrow. So let's head into the charts here. And y'all are probably wondering, you know, what exactly I look for. I'm gonna explain a little bit here. So for me, I like to start at 7 a.m. right, and at 7 a.m. is when I start looking for relatively equal highs and relatively equal lows. What is a relatively equal high and what is a relatively equal low? I'll explain. Watch this. Okay, here you can see that this high was lower than this high, right? This can't be considered relatively equal. The high to the left has to be higher than the high to the right, right? So now considering that this high right here already put in its work here. So since it already put in its work here, I was looking for another high to the right of it. And as you can see, where we're going down. So watch this, right? We came down, it created another high here. These are relatively equal, right? We came down, came back up. Here's another high. See how they're getting lower? Here's another high. Here's another high. Here's another high. So these are all targets, right? So I marked this out as the initial target, okay? The initial buy side liquidity. Now, as I'm looking for buy side liquidity, I'm also looking for sell side liquidity. So I started, right? Yes, this low right here is lower than the low to the right, and it keeps going. But I didn't want that to be my first target. I didn't like, to me, I wouldn't make this my first target, right? So what I decided to do is I wait until either or is taken out. So for example, I marked out my initial sell side here, right? This is my initial sell side. So since I marked out my initial buy side, my initial sell side, I wait for either or to be taken out first. The buy side was taken out first. So let's see what happened. Buy side ran off, right? So now you're probably asking, okay, the buy side was taken out, now what? So watch this. Now that the buy side is taken out, now we aim for the sell side, right? And this happens every single day, Yes, there's times where, you know, the initial buy side will be taken out and the market never comes back down to take out the sell side. But is that the market's fault or my fault? Probably my fault for charting it wrong, right? Now we move over, right? So we took out the buy side. Everything's cool. Now we see displacement. We see this run lower. Now for me to enter a trade on a run lower, I need to see energetic movement like this below a swing low, right? So for example, you see how the market came up and it came back down? This would be the low that I would need the market to displace off of for me to try to enter, right? I need it to show energy moving past it and closing below it. So here's that energy, right? Yes, the market didn't give us an opportunity to enter here, nowhere, right? Nowhere here. Could we have entered off of this order block? Possibly, but I don't enter off order blocks, right? I can, for me personally, if I see it and I feel like it's tolerable, like in my opinion, then I'll enter it. But usually I like to enter off of inverses or inverse fair value gaps or regular fair value gap and or a balanced price range. So we continue moving down. I see the price is energetic. I'm like, cool. So technically here I was paper trading without pressing the button, right? Because I didn't trade this morning. This is just a little recap on what my thoughts was and what I was expecting, and what I was expecting happened, which is good. So we come down here. Let's remove this real quick so I can explain. So we come here. Okay, you guys see these 3 candles right here? Boom. In between here, right? There's nothing here to fill it. There's no candle here. It's not like It's not like this, you know, where everything's being filled. Same thing here. There's a space. Same thing here. There's a space. This is what you call a fair value gap, which a lot of you guys know already. So what happens with this is when there's multiple like this, you always expect it to come back to the top one. And as you can see, it did here. But my thought process was, hey, there's a volume imbalance here, small one, fair value gap. So you guys know we have to mark it all together. Bam. So once this candle closed, immediately in my mind, I'm like, hey, I have to place an order here, right? This is, to me, a high probability, low risk entry. All right, so now this candle tries to trade back up. It doesn't reach it. That's okay, because this candle opened, traded up. Remember, wicks do the damage, the bodies tell the story. It traded up, immediately rejected. Now if you're going to enter here within this fair value gap, keep in mind your stop would have to be up here and or above consequent encouragement, meaning the middle of this fair value gap here. So it's either at this black line, or if you want to be a little safer, a tick or two above the middle of this fair value gap. As you can see, price did not leave this one. It wicked within it and then immediately rejected. Now you're probably asking, hey, you know what, whenever you're doing this, what is your target? Well, let's aim for low hanging fruit, right? If I entered here, right, which is probably just before entering a discounted price, right, because this is at a premium, right? If we were to measure out this run, let's measure it out real quick. So right here, right, we are just below being in a premium, but that's okay because we're aiming for low hanging fruit. Probably asking, where's the low hanging fruit, Michael? Where are you aiming for? Well, remember guys, I said earlier, whenever one is taken out first, we aim for the other. So if I'm expecting lower prices, I'm expecting price to do exactly this, right? It takes out buy side liquidity first, or initial buy side liquidity, and then it comes down to take out the sell side liquidity. Sometimes it doesn't happen like that, and it is what it is. So this right here would be my target. This is where I'll be aiming for. I'll enter here and my target would be here. Now if I have multiple contracts in play, then I'll take out, you know, more than 50% of it or 50% and let the others run. But in this case, it didn't run too far. Now if you were to let it run, aim for another low hanging fruit, which would be this low just below it. Did it reach that? It sure did. What would be your next objective, Michael? Well, this low. Did it reach that? It sure did. Now the play is completely over. You hit all three of your targets. You hit your main target. You hit another low hanging fruit. You grab that one, and you hit another low hanging fruit, and you grab that one. Sometimes that might not play out. Sometimes it might just, you know, take out your first target and immediately come back up. Or it may take out your first and your second target and immediately come back up. In this instance, if I were to have multiple contracts in here, then, you know, I would have let it run a little bit, just as you see here, and I would have made just a little bit more money, which is great. So my point I'm trying to make to y'all is, you know, if you have a target, aim for low hanging fruit like here. So my first target would be here. If I want to let it continue running, let's look for another low here. You guys see, these are all relatively equal lows. You see how it's getting higher? You got this low, you got this low, which is just above this low. Then you got this low, which is just above this low. Those are all relatively equal. So these are easy targets. Bam, takes it out. Bam, takes it out. Bam, takes it out. I do genuinely feel like whenever you start to complicate things is when you start losing. Things like this is very simple, right? Keep it the simple as possible. Don't overcomplicate it. As you guys can see, I have no indicators on my chart. I don't have anything against them, but they don't help. Right, it's just a whole bunch of mess on my chart. I'd rather keep my charts clean, keep my desk clean, keep everything clean, so I know and I feel great. But yeah guys, this is my simple strategy. Right, no, I did not create these concepts, but these concepts have been working for me. Okay, now you're probably asking, Michael, you know, why do you have the 15-second chart there? Well, for example, let's go back, okay? Let's go back where we marked the charts here. The 15-second chart, for me, I feel like it's crucial. Not crucial in a way where you're going to be using it as your main chart, but crucial in a way in case you miss an entry point. Watch this. Okay, as you can see, everything that I put on this chart comes onto this chart, and it's translated. Right, now remember, each candle is a minute. Each candle on here is 15 seconds. Okay, see how I deleted one and it deleted here? That's cool. Now watch this. Let's say I would have missed this entry right here. right? Which would be, as you guys can see, right, it lines up. If you look at the right hand side there, it does the same thing. See the numbers here? It does the same thing. But I'll put on the, one second here, guys. Let me put on the lines here so you guys can see, or the cross, so you guys can see exactly where it translates to on a 15-second chart, or vice versa. Now let's say I did miss this entry, right? Let's say I missed it completely. I'm like, oh shit, I missed the entry, fuck, whatever, right? Watch this, right? The market is still going to continue to move down. It already showed you it wants to move down. It showed you it has energy to continue moving down. So let's translate it to the 15-second. Okay, so it's the same process, right? We're looking. Okay, hey, right here, right? We see a fair value gap, right? We see it here. Yes, we missed this first entry. That's okay, but we have an entry here. Now, is it a little bit far-fetched? Like, is it too far down? Like, you're probably asking, Michael, but your target is literally right there. Yeah, I understand that, but it's better to get 10 handles or, you know, 5 handles than nothing, right? You still, if you're following your rules, it's a win in your book. It doesn't matter. Now, if the move was too far along, then no, I wouldn't enter. This, yes, it's a little far along, it's right there, but remember, we still have other targets that we would have aimed for. So if you would have entered at, you know, 19,080 bucks and you had 3 targets,
the market is closed.
Okay, you had 3 targets, you still would have made, you know, over 60 handles. That's still more than enough. You see what I'm saying? So if you guys ever miss an entry on whatever chart you're using, go down to the next to a lower time frame chart and you'll see an entry there. It always happens. But this was my little trade recap. If you guys enjoyed this one, make sure you like, you comment, you subscribe. Make sure you share the video in the comments below. Let me know what you guys do to trade, how you guys trade, and what is your mindset when you're going into a trade, and what do you look for. Remember, stay blessed, stay patient, and continue trading wisely. Until next time, peace.
Yeah. Overtime, 'cause I ain't have a mic. I was in that Chevy.